All right, today we're talking about something super important, securing your future. We're going to dive deep into the Personal Pension Plan, or PPP. Let's get right into it.
So, here's a question for you. If you're self-employed, a freelancer, or maybe working in the informal sector, have you really thought about retirement? I mean, when there's no big company pension plan waiting for you, it can feel a little, well, uncertain, right? You're out there building your own thing, which is awesome, but what happens down the road?
Well, guess what? There's actually a solution for this. It's called the Personal Pension Plan, or PPP for short. This isn't some random idea. It's an official framework from the National Pension Commission. Think of it as a formal, government-backed way for you to build your own retirement savings.
So here's what we're going to cover. First, what this new plan is all about. Then, who can actually join. After that, how simple it is to get started. We'll also look at how your money works, and finally, how your savings are kept safe and grown over time. Let's jump in.
Okay, Section 1, a new plan for pensions. So what's the deal with this official framework for your future?
So, first things first, you should know this isn't some brand new, untested thing. It's actually an evolution. The PPP is the new official name for what used to be called the Micro Pension Plan. So it's building on an existing foundation, just making it better and more effective.
All right, on to Section 2. Who can join the PPP? Let's see if this plan is actually designed for someone like you.
Okay, so the plan is really for three main groups of people. You've got your self-employed folks and workers in the informal sector. That's kind of the main audience. But, and this is a really cool part, even if you have a regular job in the formal sector, you can use this plan to make additional contributions. It's a way to boost your savings beyond what's mandatory.
And just so we're super clear, the term self-employed here is really broad. We're talking about artisans, traders, freelancers, consultants. Basically, if you earn your income independently through your own trade, business, or service, then yep, this plan is built for you.
Now, what about age? The minimum age to join is 18. But check this out, and this is a really forward-thinking feature. Parents or guardians can actually register their kids who are under 18. Imagine giving your child that kind of head start on their savings. Then, when they turn 18, control of the account just passes over to them. Pretty cool, huh? Okay, so now you know who it's for. You're probably thinking, the paperwork must be a nightmare. But nope, getting started is designed to be super simple. Let's look at the 3 steps. It really just boils down to 3 simple things. First, you open what's called a retirement savings account, or an RSA, with any licensed pension fund administrator. Second, you just need to provide your national identification number, your NIN, and your registered phone number. And third, you gotta have a valid bank account. That's literally it. And hey, if you've had a formal job in the past, you might already have an RSA. Good news. You don't need to open a new one. You can just use your existing account for your PPP contributions, so you're already a step ahead.
All right, let's get into the nitty-gritty. Section 4, how your money works. Once you start putting money in, what happens to it? This is where the plan's flexibility really starts to shine.
This is probably the most brilliant part of the whole plan. Every single contribution you make is split right down the middle, 50-50. This is a game changer because it solves that classic problem for self-employed people, right? You need to save for the long term, but you also need cash for now. So 50% goes into what's called a contingent portion. Think of it as your flexible short-term access fund. The other 50% goes into your retirement savings for your future. And here's how that split works in practice. That contingent portion, your flexible money, you can start accessing it after just 3 months. You can make a withdrawal once every 2 months, and get this, it's processed within 24 hours. Super fast. The retirement portion, on the other hand, is for the long haul. You can access that once you're 50 or older, either as a big lump sum or as a series of regular payments. So you see, it gives you both flexibility for today and real security for tomorrow.
Okay, so a really important question. Who's actually managing all this money? You want to know your savings are safe, right? So let's talk about who secures and invests your funds. Your money is managed by a professional company called a pension fund administrator, or a PFA. Now, these aren't just any companies. They are licensed and very strictly regulated by the National Pension Commission. Their whole job, their entire purpose, is to manage your account, invest your money according to the rules, and make sure you get your benefits.
And your PFA has some very specific duties to you. They have to open and maintain your account. They have to invest your money, but only according to strict regulations. They also have to give you quarterly statements so you can see exactly how your money is doing.
And, of course, they have to process and pay out your withdrawals and benefits on time.
Now, when it comes to investing your money, you actually get a choice. There are two main options. Fund 5A is the default. It's a conservative fund, which means it focuses on lower-risk investments to preserve your capital. Think government bonds. Then you have Fund 5B, which is a growth fund. This one is optional. It takes on more risk, investing in things like stocks, but it also has the potential for higher returns. You have to actively choose this one if you want it.
And this is a really important safety net. By default, every single contributor is automatically placed in that lower-risk Fund 5A. This is to help protect your capital right from the get-go. If you want to move into the higher-risk growth fund, you have to make a conscious, active decision to do so. That way, you're making a fully informed choice about your money.
And really, the whole system comes down to this one core idea, which is right there in the official guidelines. The main goal is to safeguard the rights and interests of PPP contributors. Every single rule, every regulation is there to protect you and your money.
So when you boil it all down, the personal pension plan is so much more than just a savings account. It's a structured, it's a flexible, and most importantly, it's a secure system that's built for the way people work today. It gives you a clear path to finally take control of your financial future. So the real question is, are you ready to start building yours?